as I said, we look at the index, and of course the first thing we're looking at is the dollar index, because it is thanks, Bill. The first thing we're going to do is we're looking at the dollar index, and that is the primary currency. And we look initially at the weekly chart so we can get a general direction for the, and as you can see, of course, just looking at this chart, the dollar is in a major downtrend, and for the last 4 weeks or so we have been bouncing off the lows. We had a primary structural sell point at the 7604, which is really a historical price point, and it was the breakout point over here back in 2008, and we also had a positive move above it in 2009. And this time, for the third time, we did trade below the 7604, and we had a bounce off, and we closed the week at the 7745. This is not yet a bullish sign for the dollar, but it is not also a negative sign. I mean, that bounce up could be an indication that we might be getting some buying coming into the market. Now, just to keep in mind, we have next week the FOMC 2-day meeting, and then followed by the 2-day FOMC, we have the Bank of Japan meeting the next following. So I think it's the second and third for the FOMC, and the BOJ is meeting 4 and 5. This is quite interesting because last time in August there was a 10-day difference between the meeting of the FOMC and the meeting of the Bank of Japan, and prior to that, this meeting was before the G7, and the Bank of Japan said that they will not intervene in the market until there is a meeting and a meeting of the minds, if you will, between the G7 and their next meeting, or they said that they will decide on the intervention in their following meeting. So the next day or 2 days later, the FOMC got together and they have announced, the Federal Reserve Bank announced that they are going to increase the liquidity in the market. They are going to increase the money flow that's coming in by buying some of the US Treasury. And of course, when that happened, the dollar turned around and started selling off, and you can see it back in August. You see that the dollar sold off, and you would see also that the Japanese yen flew up, and it was too late for them to make any changes because, again, they didn't have enough time, or they have already made the announcement that they will wait for the G7. So because of that calendar difference, or the time difference between the meeting of the FOMC and the meeting of the Bank of Japan, this month they decided in order to be able to control the market much better, they will have their meeting immediately after the FOMC. So they moved the time where the Bank of Japan is going to meet, rather than meeting in the mid-November. They decided that they're going to meet the following day after the Bank of Japan, and that is an indication that they are looking, or they are planning, or they will not allow for a big move to the downside with regards to the dollar, or they're planning to take some action. Having said that, we're not totally fundamentalist, but we're just I'm giving you that so you can expect in the next 2 days, which is Monday, Tuesday, and Wednesday of this week, there will be a lot of squaring of positions because now you have two central banks that are meeting in the during the coming week. So those two guys, the Federal Reserve Bank Tuesday and Wednesday, and the Bank of Japan Thursday and Friday. So it's going to be quite an exciting week to say the least. Okay, so having said that, looking at the dollar, again, the dollar looks weak, but what we have here, that 77.54 is actually a first sign of slight buying that's coming in. It is still down. We still are negative on it. There is no real change. We don't have a buying point. We don't have a trend change. Rather, we have a continuation. But is this better, Sophie? Okay, I'm speaking to the mic. I was trying to... Okay, is this better, guys? Marie, can you hear me? All right. So with this, we do not really have a buy signal on the dollar, nor do we have a sell signal, but we are still contained in this range. But what we have over here, that little pullback coming above the prior few days, is an indication of some buying coming in, just as a squaring off prior to the FOMC. So if I'm looking at the dollar is still weak, and I'm looking to still be selling the US dollar. So the dollar is weak. The second currency, which again is going to be the focus of next week, is the yen. And by putting this is the yen index. And this is the basket of the yen against all other currencies. And as you can see, we are at an all-time high. This is an extremely powerful chart. This is in a major bull market. This thing has been breaking out right from the 115. Now we're trading at 124. So this was the buy point, remember, from the 115. We're up 1,000 pips on the yen index, if you will. So with that, we will be continuing to looking at being buyers of the yen. And as you can see on the daily chart, for the last week we had a couple of days decline, only to see that the yen reversed and started pushing up higher. But what this does, it gives us a slight possibility of identifying a quick entrance to exit our long position. So if we were long the yen by looking at this chart and anticipating that the next week or so we're going to have a lot of squaring of position, we can identify an exit point to liquidate the long, and that would be if the yen index will trade below the 124. So we have about 40 pips, okay, on the yen before we can say, oops, now the yen, they are selling the yen, they are trying to get out of their long yen position. So until the yen index comes and trades below the 124 round number, we are going to be staying long the yen. Okay. The next currency we're going to look at is the euro. And we always look at the weekly because we want to get a clearer picture. Now, for the last 4 weeks, the euro is still within a contained range of the last 4 weeks. So the range of the closing at 139.39 is pretty much within the range of the previous week. It is also contained in the range of the 3 weeks ago, and it is still contained in the 4 weeks ago. And we are, based on the weekly chart, we're not going anywhere in a hurry versus the in the euro, but the trend is still up. The euro is still, at this point in time, we're looking for a continuation to the upside. If I go down to the daily chart, you could see now that the last few days, or the last 2 days, we had a push higher. We have a structural point on the dollar on the euro, which is the 137.99, and we have traded below it on Wednesday last week. We came back above it, which was a good buy, which was definitely a good buy in the euro index, and we closed the week at 139.39. And this kind of a close is a positive close that indicates continuation to the upside. So if I'm looking at the chart of the euro, the chart of a euro is a strong buy, and I would be looking at that of one of the currencies that I'll be looking to buy in the coming week is the euro. I'm going to come back and see which is stronger than the other, but let's the next currency we're going to look at is the Australian dollar, and the Aussie is quite interesting, and it's a little bit concerning also. It is pretty much the same. If you look at this chart over here, this week is contained in the previous week, it is contained in the 3rd week, it is contained in the 4th week, and you would see that every single currency, if you look at those last 4 weeks, you would see that there is a similar hold on a second, guys, because people tend to, there is a similar pattern in all the yen, in all the dollar pairs, if you will. So if you look at this here, you got those 4 weeks contained within the same range. If you look at the euro dollar, it is pretty much the same. If you look at the British pound, that is actually much stronger than all the others. And if you look at the Canadian, you would see it also being contained in the last 4 weeks in the same range. And all what that says at this moment in time is that there is a consensus in the market now that the dollar is weak. Everybody now is expecting the continuation of the quantitative easing, and they are looking to press the dollar to the downside. But still, everybody is not sure which way to go. That's why for the last 4 weeks, we are all still contained within a range. There is only one currency that broke out of that range, and that is the British pound. And the British pound is one of the classic pairs, and it's been trading beautifully now for us for the last 4 or 5 weeks. As you can see, we have a structure point of the 159.80. This has been a structure historical point since God knows when we have been trading it. And the other one, which is on the future, is the 156.85, and on the cash is the 157.06. It's just there is you will see it when we go to the cash. So, but every time the dollar goes above the 159.80 and it fails, it usually runs down to the 157.06, or in this case the 156.85. I mean, doesn't matter, and then it bounces back up again. So for the last 4 weeks we had 4 good trades in the pound dollar between the 159.80 on the upside and the 157.06, if you will, on the downside. And if you would sell it below the one, when it fails to stay above the 159 and take it all the way down to the 157, you would make 250 pips on each side of the trade. So right now we are trading at the 160.39. This is the close of the week. What concerns me with this close, even though it is a very strong close, I am slightly concerned about it, because it is that kind of a trade for the week, or that kind of close requires that we have confirmation before we can go long. This, even though it is positive, even though it is trading, it's a big range week, but we, as you all know, the ones that are trading with us know that we have a trading rule, one of our 21 rules, which is called the big range day or the big range week rule. And that requires that if we have a big range like this one, we need to be patient the following week or the following day before we initiate a trade in the same direction. Yes, we want to be trading in the same direction, but we would require further confirmation of that the move is continuing to the upside, because when a market closes at the dead high or at the dead low, that is one of the things we have to be careful about in our trade for the following week. So with this, the pound looks quite strong, but it also gives us, I'm fading again, okay, I actually bought this new, okay, so all right, once. So with the big range, we have to be, as I said, careful with our trades. And what it does here, it gives us a very clear sell signal, not a buy signal. I swear, I bought this, I swear this, I bought it yesterday, Darren. It's one of it took an hour just to install it. So I guess, anyway. Yeah, I guess I need one like Madonna's one, yeah. So anyway, this requires us to be careful with the pound, and it will also give us a clear sell signal. Again, the sell signal means if the pound comes and trades below the 159.80, then it is again what it has behaved in the last, from July. Every time it breaks the 159.80, it gives us 250 pips. Then again, we just closed at 160, so between 160.30 and 159.80 is practically nothing. So we have now a well-defined sell signal on the pound, even though as long as it's above the 159.80, we are buying the pound. Okay. The next one is the Swiss franc, and that is quite interesting. The Swiss franc, if you look at the index of the Swiss franc, this so far is the weakest of all the currencies. The Swiss franc, looking at the index, it is the weakest of all currencies as of yet. And it is actually, in a comparison, I would be considering that the Swiss to be slightly more weaker than the British, than the US dollar. The reason is that we have this extensive move to the upside. So if people are going to exit their long positions, they will be selling it. So that's why I would be expecting continuation. Versus the dollar, it's continuously down. So people, if they're going to exit their short position, they are going to be buying the US dollar. So in this case, if I'm looking at weakness, I would be considering the Swiss franc to be weaker than the dollar because the extensive move has been to the upside, and the only way that the traders will be exiting the Swiss franc is by actually selling it. So we already have now 2 weeks trading to the downside. We are sitting at a structural point about 20 pips above the structural point. So that is a sign of weakness. Okay, so this is the dollar. The Swiss is the weakest. Then if I look at the dollar is also weak, but we are now having the upside down picture of what we have seen. Look at this, it is contained in the range of the 4 weeks. If you look at the Aussie, it is the upside down of what you have seen in the dollar index. If you look at the euro, it is pretty much as what you have seen in the Aussie, and the upside of what you have seen in the US dollar. If you look at the yen, this is the one that's on its own by itself all the way up, but it is similar to the British pound that we have a clear sell signal below the 124. I will show you that on the... So in my selection now of the strong and the weak, the strongest currency that I have today, believe it or not, is the British pound. So the number one currency I'll be looking to buy this week is the British pounds on a continuation to the upside. And then I will be looking to be buying the euro, then the Australian dollar, I need confirmation for the yen that it is going to go up, and the currency that I'll be looking to sell, the first choice in selling would be the Swiss franc, and then the second weakest would be the US dollar. Okay? So this is the basic selection.